Good afternoon, everybody, or good morning, depending where you're calling in from. Welcome to the lodging industry update for 2020, looking forward to 2021, and a brief overview of the lodging industry report that we do annually for the Vietnam market. Normally we release it a lot earlier, but because of the problems gathering data and the different mix of respondents this year and the lower number of respondents, we decided not to do the usual full in-depth report and launch in the middle of the year, but we held it over till now so that we can focus more on what we expect and anticipate for next year from our panel of experts. But to start with, I'm going to ask Ms. Young, who's director of our advisory practice, who has the responsibility for overseeing the preparation of the report, and she'll talk us through the summary findings. Thank you, Young.
Thank you, Ken. Can you see me clearly? Ken, can you see me? Hello?
I can see you, Zoom. Yeah, very clearly.
Okay, sorry, because I had some difficulty opening it while the screen. Anyway, yes. Ladies and gentlemen, my name is Dung Trịnh. I'm a director of Advisory Service Division of Grand Thornton, Vietnam. I'm going to talk about the results of our hotel survey carried out earlier this year and the trends that we observed from the last few years surveys. Before going into that, for those who are not familiar with our hotel survey, our survey is so far the only comprehensive study about the upscale hotel in Vietnam, and we have been doing it in the last 17 years. We collected raw data responses from 4- and 5-star hotel and resorts across the country. We perform analysis on both financial and operational perspective to present in our report, which are sent back to the participants free of charge. The data is presented by star ranking and by region. This year has been a challenging year for the hotel industry, and same as for our hotel surveys. This year, the surveys, it is the most challenging surveys that we have done so far. Due to COVID-19, many hotels have not been able to participate in our survey, causing impact to the participant mix, as Ken mentioned earlier. So first of all, let's look at our hotel industry in the last 10 years. This graph presents the growth of the number of travelers and tourism revenue, in which we can see domestic arrival with 3 times, international arrival with 3.6 times, and revenue enjoy a CAGR of 22%. Compared to other neighboring countries, Vietnam had the highest growth rate of international arrival, 3.6 times versus Thailand 2.5, Indonesia and Philippines 2.3, and Malaysia and Singapore 1.6 times respectively. However, in absolute number of international arrival, of course, we are still number 4 and far behind Thailand, Malaysia, who rank number 1 and number 2. This quick graph shows us that we have achieved certain success in developing Vietnam tourism with impressive growth. But that was pre-COVID. Where we are now and what we can expect for the future will be shared by our other speaker and panelists later. Now we can go to the result of our hotel survey 2020. The survey actually covered the performance of the hotel in financial year 2019. I'm pleased to note that to make it simple, we use the term hotels for both hotels and resorts. We are presenting here the 3 key KPI of the industry. Color purple is for 5-star and blue for 4-star. In other year earlier, we also can present the data by region, but for this year, we have to make it short. So analysis by region is not possible. We present it only by star ranking. Third, on OCR, in overall, we are seeing a declining trend for both categories, and 4-star drop a little faster than 5-star. However, the higher decrease in OCR in 19 compared to 18 may partly due to the participant mix, and let hotels with high occupancy rate joining us this year. For ADR, ADR on the other hand increased slightly in 19 versus 18, but the trend look different for 4-star and 5-star, with 4-star decrease while 5-star increase. These two KPIs resulted in overall decline of RevPAR in 19. Revenue per available room in 19 declined by 3.4% due to the steeper decrease in occupancy despite the increase in room rate. Next, on revenue breakdown. In general, the revenue composition often be room revenue will take up 60% of total revenue, F&B 30%, and other operating sale and miscellaneous sale account for 10%. We observe from the data collected that in the last 3 years, revenue for 4-star follows this typical structure. But for 5-star, room sales seems to be declining. F&B more or less the same, but other sale increase. This might indicate the shift in customer demand to other service rather than just traditional service, including room and F&B. Moving to expense and profit. This is actually just a capture of our hotel industry financial performance in the last 3 years. We have more analysis for each category, 4 and 5-star, in our full report, such as component of departmental expense and profit, undistributed operating expense, etc. In this presentation, I just take this bit of info to present to you. By star ranking, 4-star hotel experience a drop in both EBITDA and GOP, while 5-star enjoy an increase in both metrics. But the trend in 19 revert the trend in 18 if we compare to the previous survey. Then we can look at the next one, employee indicator. The number of employee per hotel and number of employee per available room, or the ratio called employee to room ratio. The ratio of this 5-star hotel on average is much higher than that of 4-star. This reflects sign and service offer at this property. But you may notice that in 19, the ratio is quite high for 5-star, which is 2 versus 1.6 of last year, 2018. That was caused by, again, the participant mix in this year with some resorts participant. They have much higher ratio compared to the industry average. In other years where we have a larger pool of hotels, the ratio is roughly about 1.6 to 1.7. Employees at 5-star hotel generate more revenue than 4-star, about 1.5 times. They also get paid higher, about 20 to 30% on average. And revenue per employee in 19 increased higher than in 18, while payroll expense in 19 increased less than in 18, only about 3% in comparison to 6.4% in 19. Next, we are going to talk about the gas analysis. It will be covered in the next 2 slides. First of all, source of gas, we can clearly see here that Asia traveler, including Vietnamese, are the main source of gas, contributed more than 60% of the total in-house gas for 5-star hotels in Vietnam. In addition, we observe that domestic visitor who staying at the upscale hotel has been increasing over the year, though very marginally. And they tend to choose 4-star more than 5-star. The proportion is on average as approximately 10% domestic visitor at 5-star, but it is up to 30% at 4-star. Of course, subject to the property type and location. And among the foreign markets, top 4 remain unchanged, including Korea #1, followed by China #2, and the US and Japan #3 and #4. In terms of channel of reservation, tour operator travel agency, TOTA, the part in light gray, continue to be the biggest channel for guest reservation in overall, especially for 4-star category, where the percentage can be up to 50%. OTA also ranks second and continues to grow from around 20% 3 years back to close to 30% in 19. Next, on purpose of stay, FIT or leisure traveler and business travelers are always the main targets of the high-end hotels. FIT often take up 1/3 of the total guests of the hotel on average of own property type and locations. And 5-star hotels would usually have a higher portion of FIT guests than 4-star. But in 19, a fewer 5-star hotels joined our surveys this year, many of which are city hotels instead of resorts. So the figure for 19 did not really reflect these characteristics. And for the same reason, you can see MICE showing higher proportion than in other years. Okay, and lastly, I choose to look at what are the issues impacting hotel industry in 19 as we receive responses from the hoteliers. They said that poor infrastructure continues to be the most concerning issue, with 87% participants seeing this matter negative and very negative, followed by increase in competition. 80% of participants are selecting this, and higher operating costs with 77% selecting this. And up to 1/5 of participants consider the environmental pollution to be highly and negatively impactful. But you can look at the column on the left-hand side. Only 13% of hoteliers concerned on the growth of travelers. That was opinion for 19. And as you know, years later, we are now in a totally different situation. And our other speaker gonna talk about this in a moment. With this, I finish my presentation and hand it back to Ken. Thank you.
Thanks, thanks a lot. So can you turn your camera off, please, and mute? So I'm going to hand over to Jesper Palmquist, who's the Area Director for Asia Pacific for STR. Jesper is one of the, I would say, one of the best speakers that I've been privileged to listen to at various conferences around the region. He's based in Singapore, where he leads hospitality benchmarking company STR. With his team, they cut through the data set in the region while simplifying numbers through storytelling for a clearer decision-making process across the hospitality and investment companies, as well as various government agencies. The company also tracks historic as well as future demand and supply data. And Jesper is a very sought after speaker at events, and we're very lucky to have him with us today. So thank you, Jesper, and over to you.
Stop it, Ken. You're making me, you're pushing me way up high the rank. Well, hopefully you can hear me and see me okay. Otherwise, I'm sure someone will let me know. Thank you so much, Ken. And listen, here's how it works. You're the godfather of lodging industry in Vietnam. And if you ask me to join, I will join, right? It's like the Mandalorians say, this is the way. So thank you. And hopefully you're aware of what we do. You know, we're a co-star company as of a year. They work in commercial real estate data, but to Ken's point, we focus on hospitality and all those different ways. We work with a lot of you, if not all of you. So I appreciate you guys sticking to this throughout such a horrible year, of course. And I think the biggest example, I had a question yesterday in another event, like what's the demand for this kind of data this year? One of the biggest things is property valuations. Like, you need that reliable benchmarking, constant re-evaluations of assets in this year and beyond. So super happy to be joining Ken and you guys at Grant Thornton on this day. So as I share, hopefully the right screen, that's always a good start. Let's see, share, and off we go. Hopefully you see that slide there. Again, someone will let me know if you don't. So the things that I was going to unpack just in a few minutes was really three kind of topics. The first one being just what's happening very quickly in Southeast Asia, to frame it up, how Southeast Asia and Vietnam relate to each other, where you are on the curve right now, not going back too much in time. We all know where we are and how we've kind of ended up here. Secondly, focus on Vietnam, of course, a couple of side stories there that hopefully entices conversation in the panel. And finally, on the critical supply and pipeline situation. So I'm skipping a bit of P&L, and that it's end of the year, and next year we'll do monthly P&L and on the book stuff. So let's cover what we can today. And the first slide really that I want to cover is something that is, a picture says more than 1,000 words, and the global map is not a pretty vision at the moment. We know that. But the green shoots that we're seeing, which is occupancy here over 50%, is mostly in Asia Pacific, which makes sense, right? Europe, the one thing I would say, and we said this in the last couple of weeks, as these new waves happen, it looks at least like as authorities are able to deal with it slightly differently. Look at Europe. Fewer properties are closing this time around. There's shorter curfews and shorter time frames for these restrictions. Schools are open, all those kind of metrics, so hopefully it bounces back quickly. Zoom in on Southeast or in Asia Pacific, you see it there in China, regional Japan, Indonesia, Australia. That's where the green shoots are coming. And also when you look at Southeast Asia, in drive-to markets like Hua Hin and absolutely the regional Indonesian markets. To give you that quick idea of just the diversity in Southeast Asia, Cambodia and Myanmar makes, I think people realize why they are smaller tourism nations in that sense. So it's a bigger drop and harder to get out. On the flip side, you have Singapore on the other end that have that government support that feeds high occupancy numbers and low ADRs for quarantine facilities, mainly throughout the city-state, where it's really thundery and rainy outside, by the way. It's that season. So, and then you look at Indonesia, and that's where we're only seeing the real growth at the moment, in organic growth, real travelers in the regional parts, less so in the capital. So, and that leaves us with Malaysia, Thailand, and Vietnam. Malaysia used to be a bit higher. You may have read Penang, Langkawi, and other parts getting some good business, but then volatility, they get new cases and fall back down to the levels of Thailand and Vietnam. And these two nations have shared the path for the last 5-6 months, low base levels and weekend activity. So that's Southeast Asia very quickly and broadly, but any questions later, let me know, because I want to make sure we cover the Vietnamese data that we have. And I think the first waves look at just the last week, right? The snapshot of what is the occupancy, and you compare these two things here, you see it's very few markets in North and South where it reaches above 25% on average. You will have an hotel, and I'm sure someone is joining us today. Hey, I did 70% one weekend. These are average levels, right? And by market level. So it's clear that in some markets, we know that it's pitching up, but generally very few markets deliver over 25%. So the journey here, the more interesting part here is when you look at the second wave. Statistically speaking, I find it interesting to see that that second rising that is happening right now is happening at a very similar pace to that first climb up from April to end of July. The difference on why there's two dots, that's Central and North Vietnam that is slightly higher than South Vietnam throughout this period in the first climb, but now we're seeing them close, much closer to each other in the climb up now. So that's the long journey. So where are we now? So in the last 45 days, nothing much has been happening. We've been seeing this for quite a long time. This is at national level, a low baseline of 20%. No P&L is going to look good on that, right? It's not enough. And then you get a few Saturday spikes that lead up by 10 or 15% or so. But it isn't one size fits all, of course. So it does vary. So let's look and break down the markets. Now, this is where Vietnam is slightly different than some other countries, because the capital, in terms of being protected, and you look at Beijing, you look at Bangkok, you look at Jakarta, generally the capitals have a lower occupancy level, and that's where it's been a little bit different. We can talk about that in the panel as well, why that is and how that impacts the industry. You'll see less of the Saturday spikes and weekend business. People want to get out of the town. People want to get out in terms of the pandemic, finding something that works, social distancing, and getting out of the city after being either locked down or cooped up in regions, especially when schools have been closed. So Ho Chi Minh a little bit lower and Hanoi a little bit higher. But I think it protected and having some of that corporate business maintaining within the city has held it up reasonably well and very similar throughout the whole time. And it's when you start blending in the resorts, it gets interesting. Because Da Nang, if I showed you this through the entire year, there's absolutely been periods when it hit higher. But in the last 45 days, it's been very, very hard. And I know some properties that higher, but on an average, the market sees and has continued to see now for some time extremely low numbers, of course. So I don't have to tell you if you operate there or know that market, but that gives you an idea of just the variation between these different levels. And then you look at a market like Nha Trang, where, whoa, big spikes. So here we go. This is what we're talking about when we see in Hua Hin in Thailand and in parts of Western Java in Indonesia, and previously, say, in Penang and Langkawi. It's not as consistent as some other markets. It's high, it reaches up there, and the base level is low, but it's more consistent in a market like Phu Quoc, where you're really seeing every Saturday for a long time, and it could pitch over also into Fridays for a 2-night stay. So we are seeing that, but we got to remember that this is a long way from where we want to be, but obviously the pattern, we've seen it for a long time, it starts with that. So next slide, I'll show you just the pace. Again, this is back to national level total. So rate levels have dropped down to be 25% below where it should be or where it was in 2019 recently. And you see the occupancy there. So it's just really far away from where we want. And the problem is that the road ahead is still uncertain. And I'll get back to that in a projection in a couple of minutes. But it's, you look at that and you add up and look at RevPAR for that, it doesn't look very good. But you're not alone. If you look at all the Asia Pacific markets, you'll clearly see here that to the right over there, you see Vietnam. Yep, you're there with Thailand, Cambodia, Malaysia, Myanmar, and Sri Lanka is arguably worse. So there are markets that are doing worse in terms of RevPAR year over year and the variation around it. So not alone, if that helps, but it's obviously affecting everyone in different ways, and it's trying to dig up as much as you can through that domestic business and the travel lanes, which we'll get back and talk to later. But another question I posed when I was researching the data for this, which I love, because getting asked it means I get to learn more about these markets and I talk to a lot of people, it's the seasonality, because you can look at seasonality through a lot of different lenses. So when I throw up and we look at Ho Chi Minh and Hanoi, so 5 years, 2015 to 2019, and the numbers above are the months. So you can clearly see the seasonality, green obviously being higher occupancy and red lower, where we're right now in that 6-month period where occupancy normally is higher. All right, so it starts over there in 10th, 11th of the month, October, November, and then it pitches over here, and then you see low. So you could then take the lens and say, okay, that means that we are now year over year wise tougher, but once Q1, so maybe vaccines and travel enabling solutions and more travel is when it comes to a bit of the shoulder season, a low season of Q3, Q2, Q3 next year, there is, an easier padding. So the gap is a bit smaller. But conversely, when you look at the resort markets and coastal places like Da Nang and Nha Trang, it is quite different. Like, sure, Nha Trang is the first 7 months of the year, perhaps historically, and we're right now in the lower season. But Da Nang, for sure, you have more 6-7 months until you come into you're competing with high historic occupancy numbers when you're talking that conversation between brand and owner, etc. And I think that's interesting. My only last caveat on seasonality is what is the new seasonality? Remember, we'll have a lot of pent-up demand. People now would just say, you know what, maybe it isn't the best time of year in terms of weather, but there are flights and they're available right now. Seasonality may shift in the first 18 months coming out of the crisis as well. So let's not take that for completely guaranteed how it's going to turn out. The last piece on this is I looked at a segment, corporate housing. Right, corporate housing and service apartments been very thriving in the last few years going into the pandemic. It worked very well in Vietnam, and I'm not covering much of condotels, which is big in here, which we can talk about in the panel. But in Thailand, in Indonesia, in Singapore, and even across Southeast Asia, service apartments with the main brands, it's been very profitable and very interesting for people to get in. So I asked the question, how has that been trending throughout the pandemic? Well, clearly, it's the same trend in Vietnam, just like Thailand. You can see the difference here in these 4 months. It's been shipping more than double digits higher than total Vietnam when you exclude the service apartments. It has closed the gap in the last month and a half, as you can see there, purple line edging towards closer, but certainly a strong lead in service apartments. I mean, it makes sense. You have a kitchen, it's big space, and all the Koreans who were able to stay in Vietnam and et cetera throughout in the initial parts of the pandemic. So this confirming may be the obvious for some of you, but it's interesting to see nonetheless. Last part of this is just looking at the supply and pipeline. And from a Southeast Asian perspective, over 20% were temporarily closed as a result of restrictions and orders, et cetera, and less than 5% are now closed. So that means the metric, what we call total room inventory occupancy. So when you say occupancy in Hanoi, it would have been maybe 20% if you factor in all the closed hotels, and maybe 30% if you only factor in the ones that are open. So metrics that are both important for various, if you're a listed company, et cetera. So those are now very similar. And in terms of the pipeline trends, we have seen the delays and it's pushed into 2021, less of the movement in the delays now than they used to be. And almost half of those pipeline rooms are already in the construction. And generally, as a rule, it means that they are likely not to be delayed. So what does that translate to for Vietnam? Well, at peak, we had recorded 14% of all rooms in Vietnam were closed. 14%, so slightly lower than the Southeast Asian average. It's also moved further. So almost everything is open. We have 1% temporarily closed now, right? When you take out, say, renovation and that kind of stuff, but 1%. So again, the numbers between that occupancy TRI and the normal is now leveled out. So what does it mean in the new pipeline, what's coming? So let's round this up and say, what's on the roadmap? Well, first of all, it's almost half in the upscale class. Similar to around Southeast Asia, what we're seeing, these are brands that people want to invest in at the moment. Maybe there was a gap in that in the Vietnamese market. I'll leave that to you guys, the brilliant consultants to diverge on that. But then also, what is the face? How does that, it was half in Southeast Asia. It's the same here. You got 49% of all these rooms are under construction. So that means they're less likely to be delayed. So we know properties have been delayed in construction, but now delayed in the pipeline, but with half under construction, few of them are likely to be delayed. So what does that lead to in terms of timeframes? Well, it means that 75% of all these rooms are due to open within the next 2 years. Will they though? That's the question. I want to raise that a bit to the panel. And I think one way of looking at it is probably one of my last slides here. If I just look at 10 years, 15 years. So if we look at the past 10 years, the growth pace of new rooms added has been high in Vietnam compared to all of APAC, sitting there not 2-3%, but 4 to 5%, 5% on average. It's been high, but tourism has been growing. FDI is coming into the country. It's an amazing place that makes sense, and you needed hotel rooms as well and great products around the country. So if I add now those pipeline rooms you just saw, what does that hump look like? And look away, it might be scary. It is scary because it looks like that. So it's a very, very big jump up to 15%. Now, if you ask me, I don't think we will see 15% growth there in 21, 22 in new rooms, because I still think that some of those delays that are now pushed into that thing is going to move a little bit further. So I started drawing a line and looking at these properties, and I go like, maybe 10%, maybe we'll average out there. So I suppose I raise that question to everyone who's on the panel or on the crowd as well here. You know, where do you see it? 6, 7%, 12, 10? Because the big question is going to be the unknown of how many of those, the half of the properties in the pipeline that delayed, how many of them actually move into further down the line? And secondly, once we go through this, Vietnam is still hot. It's still interesting to many investors. People want to have properties in Vietnam. Airlift will come back and it will continue to increase from new source markets and not just China, right? So what will the pace be from 2025 onwards? I think the final piece of this is just like, where do we end? Because in terms of outlook and forecast, we just downgraded all of Southeast Asia because of the uncertainty. We know new supply, since it's so much under construction, that will put the strain on it. But I think 2024 is still what we're saying for demand coming back to 2019 levels. And we're not seeing, there's a lot of talk of vaccine, a lot of talk about the travel lanes, not seeing much of it just yet. So that pushes things into Q2 next year. So my high summary is really, never mind like the West, you know, it looks very grim out there. China's up to standards. But again, I think Vietnamese resorts continue to have an opportunity to do pretty good business during long weekends, etc. And trying to get those travel lanes will be absolutely critical. I think the pent-up demand is so big that it will come back. I'm very positive around that, but it's going to take longer than most people think, is my view on that. So Ken, that's my quick rundown of the data there. So I'm going to stop sharing and hand it back to you, sir.
Thanks a lot, Jesper. Interesting as always. And panelists, please feel free to respond to any of those points when you're answering your first question. So another recognized expert in the field, Mauro Gasparotti. Mauro is director of Savills Hotels, Southeast Asian operations. He's well known in the region and highly regarded in Vietnam. And he is recognized as one of the judges for the Property Guru Asia Property Awards. He's also the vice chairman of the European Chamber of Commerce Sector Committee for Tourism and Hospitality. So over to you, Mauro.
Thank you, Ken. What would you like me to take? Do you have any question for me, or we'll just have a good guess?
No, sorry, I'll read it. Yeah, so we've had a good overview from Jesper, and whilst the market has been severely impacted, we haven't really seen any major distress levels in terms of owners and unloading of property, although there are one or two on the market, as we know. So interesting to get your view of the current market for sales or properties on offer. And where do you see the market heading, particularly, again, taking into account that, you know, huge volume of new rooms coming onto the market, both hotels and condotels? Thanks.
Thank you, Ken. First of all, thanks for having us here and having myself here. Always a pleasure to be part of the path to recovery, as we call it. It's the last time I want to start after Jesper. Obviously, it's very difficult to keep up on his energy. And I was writing actually a lot of notes when he was there. So I really tried to go from what he said to keep the whole thing's going. Looking into the transaction market, I would like to take off what Astiar was mentioning of all this growth, because I think the whole story of transaction starts from looking at the growth of this country in the last 10 years. Vietnam was obviously one of the fastest growing in globally probably, and definitely in Asia Pacific. We saw the tourist arrival, international tourist arrival, doubling every 3 or 4 years. We saw airport going from 5 to 10 in the matter of few years, international airports. We saw a lot of supply, as before was mentioning, coming into the market. So really a market that has been growing and growing in the last 10 years. This has also had a great impact into the travel industry, the travelers itself. Vietnam moved it from being an experience destination, so people coming here and just pretty much visiting the whole country, into a holiday destination, where you start to see places like Da Nang, Phu Quoc, Nha Trang, becoming a specific target, specific destination, especially for Asian travelers. So Vietnam is not just growing in terms of number, it's also reached much higher level of maturity of the country. So that has led everybody in hospitality to have this very strong positive view into the future with very strong cash flow. So this is pretty much the situation that we see in 2019. And that has led to impact the transaction market. Hotel pretty much have been very challenging in terms of asset valuation, as it was mentioned before. In this period, it's also more difficult, but in Vietnam, it's always been pretty much challenging to see what the value was standing up, and that has had a great impact into the transaction market. So we went from a few years ago looking at 11, 13% yield down to maybe 7, 8% yield recently. And in 2019, there was a lot of property. There was some good property coming with an asking price of 4 or 5% yield. So Vietnam has always been a pretty tough market for investors to actually find the right property or the right price. As a result, we didn't see many transactions in the last few years. This year, I think, was only the Ibis and the Capri in District 7 sold. We, as a service, are finalizing one asset in central Vietnam. It will be announced soon. It's a resort asset. But beside that, this year, we haven't seen any other transaction. Last year was a bit better, still not much, but there was a Sheraton, there was a Ho Chi Grand, there was the Intercontinental, so few decent assets has been transacted, but again, the negotiation started much earlier. So, but overall, it's been a market that has not seen as many transactions as we wish. That moved to the question of what is coming after this. Obviously, the situation is different than before. There's much more pressure into hotel owners to actually see through and to search for solution. But generally speaking, I would say that Vietnam is a very fragmented country, so it's not everywhere the same. You have some locations which are doing much better than others, some type of property which are doing better than others. So we cannot just generalize and say that the whole market is distressed or the whole globe is distressed. We need to cherry pick by assets. That said, for example, in the city hotel, which is what everybody would like to see, are the best property. Everybody has always been try to buy this asset, and nothing has been on the market for a while. I believe that those just come out from a strong cash flow. They don't have a financial obligation, so somehow they will hold on the asset. And if they go in the market for sale, they will be definitely not a discount distress situation as we would like to see. We may see more property on the market, and that will help a lot all these investors that have been trying to enter Vietnam, but probably not a distressed price that we will that everybody is thinking to have. If you look at probably the coastal destination, Da Nang, Cam Ranh, Phu Quoc, in this case, we may see a bit more pressure into going to a price that was not available before. I wouldn't define that distress, because usually we have a bank and we have a Vietnamese buyer who would come in first, but definitely would see much more opportunity into the coastal market. And especially, as was mentioned before in the presentation, looking at the under construction and the pre-opening project, those are the ones that are feeling more pressure than others, because somehow they did not expect this situation. So we start to see owners coming to us at all levels, asking for support. And this has been really just the last few days, if you like, a few weeks. Back 1 month ago, I would have said there's no distress in the market, but we start to see in the last few weeks a bit more a developer approaching us and looking at for solution, and could be an under construction project, could be almost completed, but also the existing and operating asset. Now, this leads to last part of my opinion into the market. That is also good to see that somehow I see a re-energized investment market compared to before. As we mentioned, the last few years was challenging, for owners, for potential buyers to find any property here. What we see now is buyers start to call back because they know that something is coming. A lot of them are actually Vietnamese companies. I was in Hanoi a week ago, a lot of meeting with a good company in Hanoi. They just say, look, give me asset. I'm ready to keep buying in hospitality because I believe into this strong growth in the future. I can overcome this temporary situation, but I believe in Vietnam growth. So there are a lot of buyers out there, and we believe all the few other property will come in the market. Thank you, Ken. Over to you.
Thanks, Mauro. Interesting, as always. So my our second guest is Nomin Duc. Duc is the chairman of HG Holdings. He's been in the travel industry since 1993, firstly with Vietnam Airlines, and in 2004 he set up. He became a director of HG Holdings. The group handles inbound, outbound tours and transportation, and also owns hotels. Duc is also on the board of the Vietnam Tourism Advisory Board. It's been my pleasure to been working with him in that capacity. Duc, you've been quite vocal recently on the need to build on and promote safe travel. So it'd be interesting to hear what you've been doing within your own different business lines to differentiate your products from the perspective of safe travel. And what are your thoughts about 2021?
Yes, so can see that we also doing business in hospitality. We also do about the inbound. We also cruise. Also the hotel, airline, also technology, OTA. So the pandemic is impact a lot of our business. So like you see that is the 2019 is the international tourists come to Vietnam is grow, is very fast. And we also do a record in January because we also have new product. First link between Vietnam and India. The number of the passenger is the first direct link between Vietnam and India. So the number of inbound tourists from India come to Vietnam is grow very fast. However, we in 2020 we also have restructured the safe travel. Also restructure our company. Also look like the inbound. We also have the new procedure for the prepare for the. I think that 2020 is the not easy. We also work for new procedure for 2020. We also have some partnership with charter flight when is the Vietnam's open the country, and we prepare for that. Also for hotel and crew, we also apply about new procedure for the safe travel, and of course we put the passenger at the centric. The safe travel is very important. Look like airline also. We good news that we also have some new partner and ready to go to Vietnam, and of course Vietnam is the very highest demand for traveler, and we are prepared for all document look like the flight permit and prepare all the land arrangement, everything, and ready to go when the country is open. So I think that is the 2020 will be the preparation for 2021, and we do hope that is the next year will be the we do hope the vaccines come out and the Vietnam's open the country in maybe second quarter, and we start the new business today. Thank you.
Okay, thanks, Duc. And I'm going to turn now to Tran Trong Kien. Kien is the founder and chairman of Chien Minh Group. It's a diversified travel group, hotels, cruises, air transport, and others. He also holds senior positions with many professional and social organizations. He's also currently the chairman of the Vietnam Tourism Advisory Board. Ken, and you recently opened a great new resort property in South Hoi An that we had the pleasure to stay in on Friday night, run by Tui Blue. I don't think you'll mind me saying that I think all your business lines have been pretty badly hit by the pandemic, and been working closely with you in advocating policies to the government to help the industry. Interesting to know what you consider the biggest changes the industry as a whole needs to make, and what should the government be doing to try and help the industry, bearing in mind that so far they've made it very clear that they're not going to sacrifice health and safety for economic benefit, which doesn't really augur too well for opening the borders anytime soon.
Thank you, Ken. This is the longest introduction you made for me ever, I think. Well, not all our businesses have been badly hit. There were some good news as well. And for example, our online business, iView.com, there were times that we took about 25% of total online market, grow by almost 17% compared to what it was in 2019. And some other businesses like the seaplane business suddenly flying about 16, 17 fly a day, just the demand from domestic market just surging as they could not travel anywhere. So I think for me, two parts. I want to talk about the big changes and the trend that you can see in the market are going to stay in Vietnam, and we're observing together. I think many of those trends have been there for a while before the pandemic, and the pandemic just accelerating it. So such as the digitization, the sustainable social equity, and the domestic travel. So furthermore, I think we can see that the gig economy are becoming not just in the world, but in Vietnam are booming, and it's there for to be successful ones for some time. For me, the number one and number two, and we can see that that people also, as we're looking at booking months later, they need full flexibility. The regional and local businesses, the online platform actually doing way better. So that's something we probably stay. We also see that, as Luke mentioned earlier on, safety will be one of the focus and to stay there for a long time. You can see that people actually expect that when they go through ETA placements, hotels and resort safety department now that people will be wearing masks in public. Staff member will do the same, as well as keep a social distancing, hand washing, sanitization level will be very, very high. Third, I think people actually talk about social equity. I think people are looking for a greener solution and more sustainable products, and looking for at times you can see that people start looking for a much smaller and more safe, deemed to be safer as well. I think what I'm probably seeing as well is maybe self-serving, because at DMG we have a lot of these boutique smaller properties as well. But we see that people actually looking for something more like a purposeful travel, where not in the past, it's a lot of thoughtless travel. You don't need to go to Bangkok, but I think it's good to go there for a day and come back because it's possible, because it's cheap. I think purposeful travel is covered for getting more green, getting more meaningful, and people start giving more. So those kind of trend we're observing and think likely to stay together with the gig economy. So what the government can do, and I think you and me working a lot can, and I think a lot of people on the call also working on how to help the industry to recover. And I think at the recent summit last weekend, we talked about it. So I just summarize quickly. First, I think for this foreseeable 5 to 6 months, maybe even to 24 months, domestic and regional travel is very important. So have to rebuild a sustainable, strong domestic economy, tourism industry, which is very important. And one of the first thing we expect that the government should be doing it well is try whatever they can within the capacity to support good companies. So I think our Tourism Advisory Board working together in proposing this kind of solution where company can have some loan to prevent the cash crunch, as well and be able to restructure their loan moving in 2021. We know that there are over $150 billion have been restructured this year, and it's likely that the crunch and the current crisis are going to probably go on all the way to 2022. This restructure needs to be extended, otherwise you will see what Morrow had observed, start seeing that kind of distress thing come into the market. And I think it will be a further longer term promotion of Vietnam domestic market through the reduced fees and taxes for travel country overall. I think if you want to maintain and keep them alive for the coming 12 to 24 months. And in the meantime, we also discussed with the government how to make Vietnam more competitive compared to the region. I think we all know that we have a big jump over the last World Economic Forum assessment of Vietnam. We ranked 63, still way behind Thailand and a few other countries in the region. So in this one, I think government was doing is they would invest more in infrastructure. We heard about Long Thanh Airport. We're seeing already the fixing of the both Nội Bài and Tân Sơn Nhất Airport, and also the potential to develop Tu Lai Airport as well to be one of the big airport in the central Vietnam. The discussion from us all the time about the ease of visas and the introduction of online visa have been a big progress. And we believe that we should be able to get more visa waiver policies, longer stay, and we're also asking for longer visa for people who come and stay over the winters. Business people can go for 5-year visa, where similar to what Vietnamese can get for some other country. And we're working as well quite hard with the destinations, the linkage between the destination to create a strong DMO to work in marketing. And ultimately, we would believe that would be a good time for Vietnam to be able to go into the transformation, especially in digital transformation, to make the market more competitive. So it's all not doom and gloom. I know that over numbers looking pretty sad, but we believe that at Jasper and Morrow mentioned, we believe that we will recover, and we probably recover in 2021, probably very much at the end. I am right now feeling a lot more confident compared to what I was about weeks ago, seeing that the vaccines are actually working, and then there will be more vaccines going online as well, and seeing a success of Vietnam in containing this pandemic. But ultimately, what happens on the 1st of December, a couple of days ago in Saigon, was showing us that we need to stay vigilant, and this thing could come back anytime to hold up until the vaccinations apply to 50% of the population. Back to you, Ken.
Thank you. Last but not least, we're going to bring in John Gardner. John's well known to many of you. He's the General Director of the chain's Caravel Hotel Joint Venture Company, and he's managed many Accor and IHG branded properties across the region. And he was also General Manager of the Caravel before assuming the role of General Director. Ken, could you switch it? Yeah, thanks. John, I know it's been a pretty daunting year for you guys over at the Caravel, and for your staff generally, as it has been for most high-end city hotels. I don't think you've been singled out, but interesting to know what changes you've made or that you're planning to make for the future operations, both to streamline costs and to respond to the concerns over safe travel, and what you see the prospects for 2021 and beyond. And I think throwing into that question is, where do you see business travel? Do you see business travel picking up to pre-COVID levels, or do you think that's going to be a long drawn out process? Thanks. John?
Yes, can you hear me?
Yeah, okay.
All right, thank you, Ken. Yes, interesting question, and it's interesting times we live in. Look, like all hotels, we're certainly not the only one, and I think all like all hotels in the cities, we've been suffering. Occupancy has been really bad. Particularly during the week, we get a little bit of staycation business in the weekends, and occupancy has come up, but the events in the last few days in Saigon, I think, will affect us for the next couple of weeks, and we will see. We've already had cancellations with for rooms as well as events, because but our events business has been picking up. Our food and beverage outlets have been going quite well over the last few months. But what we've learned from this is how to run an operation in a leaner way, with less staff, less management staff, or middle management staff, I should say. And I think overall we've learned that there are ways to run a leaner and more profitable operation. So that's a big learning curve out of all of this. And I think going forward, we will be, when we do replace staff, we will do so selectively and with probably less numbers. We've gone through the exercise of, like all hotels, reducing operational costs wherever we can, and I think most hotels are following similar policies and implementing these. I think going forward, I think corporate business will be slower to pick up, particularly long haul business. I think when we do finally get vaccines, which, as Jesper mentioned, I think it's going to take quite some time to roll it out. It's not going to happen overnight, and I think it will be towards the end of Q3, Q4 before we start seeing travel bubbles between Vietnam and other countries. It's not going to happen quickly, but I'm sure those travel bubbles will be between Asian countries and Vietnam, and not so much the longer haul. I think that companies in the Northern Hemisphere will be reluctant to have their staff travel for long events, for corporate travel. There'll be a lot more Zoom meetings, Zoom conferences. I think that will be a trend in the future, more so than it has been in the past. But having said that, I've been, in my very long career, I've witnessed quite a few of these types of things in the world. And I was actually working in China during SARS, and we operated the hotel then at about 3% occupancy for 9 months. But very quickly, corporate business and leisure business came back. So it's hard to know, but I don't see any major improvement in overall occupancy till Q3, Q4 next year. We might get a slight increases, but it's not going to be dramatic. I think we're still signing contracts for inbound business. We're still doing a little bit of marketing overseas, a little bit, because I think we need to keep our name out there, because eventually it's going to come back. And I think when it does come back, particularly leisure, it's going to come back with a hiss and a roar overall. I think what will change in the future, and I think as others have said before me, hygiene will be a big issue. So we will probably continue to have sanitizing in entry into the hotel. People will have to wash their hands with sanitizer. I think a lot more people will wear masks, even when this whole pandemic is over. A lot more people will be used to wearing masks and feel more comfortable doing that. And we'll certainly maintain our current strict hygiene and sanitation around the hotel, I think, forever. That will be just a standard operating procedure. We will be like is current in Western countries now, our buffets. We're currently going to install sneeze guards over our buffet, which is not so common in this part of the world, but we'll be doing that. And there'll be other hygiene standards that will be implemented as we go forward. So yeah, that's how I see it, Ken.
Okay, thanks, John. Interesting on the reducing staff numbers. I always remember when I started doing some consultancy work with a well-known at the time Swedish hotel operator. I think 5-star hotels in Sweden were operating at below 0.5 employees per room,
Yes.
compared to the 1.5 in Asia. So there probably is quite a bit of room to maneuver there. But
Yeah.
and the other, and I think we're almost at our ending time, but another interesting thought just to leave people with is, you know, Airbnb or the homestays or Luxstay, which is popular in Vietnam. We're already seeing, you know, comments coming out of the US about the increase in popularity of Airbnb stays as people look at safety and want to travel driving distance, and renting a house is better value for a family. So it's going to be interesting to see how that plays out, because at the last count, I think we saw there were over 50,000 registered Airbnb stays in Vietnam, which is actually not a small number. And I think there's probably going to be a lot more people joining those platforms to rent out properties. So,
yeah, I agree with you.
Unfortunately, we're not going to have time to get the panel's input on that, but I'd like to thank everybody for supporting this webinar today. We had a good, healthy number of participants who've all stayed throughout, so that's great to see. So thank you. If you've asked a question, I see there may have been one or two just come through while we're wrapping up. We will get back to you with written answers on those. So thank you. So thanks everybody, and safe travels and safe stays wherever you are. Thanks.